go through what's going on, okay, where we're standing. We're just 2 minutes away from the PCE, so we're gonna look the data together. As I mentioned in my Instagram live earlier this week, PCE is quite key, despite the forum yesterday with Mr. Powell saying that we're committed to keep tightening, and that the risk, actually, it was quite he highlighted that the biggest risk is not how much they will tight or not. Actually, that's a certain deal, apparently. The thing is how the market will respond and how quickly the inflation will come down from their tightening, because so far it seems that inflation is very persistent, and this is what they worry the most. So I'm not sure how many of you have watched a bit the remarks yesterday from the central bankers, but all three of them, I'm referring to Governor Bailey from UK, from the Bank of England, Ms. Lagarde, ECB President Lagarde, and Fed President Governor Powell, they all confirm their commitment to bring inflation down to 2%. What was not weird, but what was key yesterday is that Mr. Bailey refused or didn't wanted to clarify, to confirm the how deep they will tighten. It was in line with the tightening. I mean, they remain on that path, but he refused to confirm that they will tighten as much as 50 points on the next meeting in July. So that was the key about the Bank of England. But they all agree that the world has changed. It seems that the inflation is very persistent. But they are on the same page, all of them, all three of them at least, that there will be no doubt that their target is to bring back the low inflation with the target at 2%. That was always the target anyway. So they will keep tighten. That was the key yesterday. That's why we've seen dollar on bid, something that continues so far today. So I'm going to share my screen so you can see the dollar, because I have it. This is the daily chart, obviously, but you can see this nice strong bounce. And today, let's put the 1 hour actually. Yes, so you can see this appreciation, but I think it's clearer in the daily chart. Sorry, that reverted, found support from the 20-day, full bullish positive candles yesterday and the day before, and remains to the upside today, retesting 105 level. So it was retested and it remains still, actually, so far it holds about 05. Now we have seen a bit of a pullback, but it breached as high as 105.30 this just earlier. I mean, just earlier. Now, okay, the data are out. Let me share a bit. Let's check together the data, and I will get back to what I was saying afterwards. Once again, I'm highlighting this is a session for you. It's a live analysis, so I want you to let me know if you have any questions. If you want me to analyze a particular asset, that's my job. This is what I do. I will analyze it for you. I will help you understand, and actually, I will do whatever it takes to help you guys. So I'm here to help anyway. So feel free to add any question that you have on the comment box below YouTube video or below the Facebook ones. Yes, it's yes. Okay, I'm gonna. So Remy is saying, give us free talk about fundamentals. I will explain the fundamentals right now, but have in mind, dear Remy and everyone, what tightening means. Tightening means, okay, just very briefly, rising of interest rates, right? Rising of interest rates. So that has, as a consequence, the support of the country's currency. Okay, due to the higher interest rates, the country's currency is getting appreciated. It's getting expensive if we compare it with other countries. That's why we've seen dollar being on bid for so long, along with the along with its safe haven demand. So people during times of uncertainty, of a lot of uncertainty, they turn to dollar. So that's why dollar it's an asset that it was well supported since April last year, and it's expected to remain supported because markets are pricing in the tightening. That's why it found support. So overall, from fundamental perspective, from technical perspective, US your dollar index remains supported. Something that is explains the decline that we've seen last week and over here in May were some how can I say that some they were due to the economic data, a bit of a technical corrections as well, but it has to do also with some data that they put the US economic recovery into a question. Okay, so now let's turn quickly to the calendar, and I will explain right now what I'm talking about. Why we're seeing these ups and downs, even though the overall picture for a dollar is positive, the long term. By saying long term, I'm referring to weekly, monthly, yearly basis. Okay, so except weekly, so monthly and yearly. So economic calendar, there we are. So data finally out. What we have, doesn't stay. So what we have, okay, PCE, 0.3, core PCE, 0.3 for May, so in line with last month, but below the expectation. The yearly one stay as it is, the price index. Jobless claims slightly lower than previous, with the previous reading revising higher. Beat expectations, and that's not a good thing. Jobless claims, the continuing jobless claims, by saying continuous jobless claims, we're referring to the people that they already claim for a jobless to get the jobless fee. You know, when you are unemployed, the government gives you something to help you, right? It gives you it pays for a period of time until you find a new job. So that means, so the continuous jobless claim, it means that people that they have filed a claim because they are unemployed last week or before last week, they still placing claims because they are still unemployed. So that's why none of these two readings are good. Why? Because it means that we keep having people that continue filing claims, but also we have new ones. So we have another new 231,000 people requesting for the first time to get paid to get a jobless claim. So even though that number is slightly below 2,000 lower than last month, the fact that it remains high and also beat expectations, that's an issue. So it means that even though the labor market in the US was in a rally, I mean, it was positive so far. These raise questions whether the strong labor market, the so far strong labor market in the US, is still the claim, is still the case, sorry, or whether we're gonna see the labor market in the US slowing down. Because for Fed, it was very important for the Fed that they were seeing labor market remain strong. So if we see the labor market in US slowing down and unemployed people increase, the number of new jobs of the NFP detach, slow down, etc. That means that they're bad news for the central bankers. That means that the unemployment will rise, and etc. So that means for the Fed that whatever they have done so far didn't significantly help. So that means that they need to take further action. Okay, I don't know, maybe more aggressive tightening, because Fed is already aggressive, or Fed is already tightened a lot. So it might means that other than tightening and aggressive tightening, they might need to consider other tools in order to help the economy. So who knows? Let's see. Let's wait and see. But that the data today, that actually it's actually rising the what the market is currently pricing in. So that strengthens the scenario of aggressive tightening from the Fed in the next meeting in July. The jobless claims, along with the PCE, with the personal spending, which the personal spending detected. So you see, that means that people, they don't really spend much yet. They don't really spend much. They detect the amount that they spend. Always below you can see the explanation, right? So why people spend less? That's the fundamental speech, my dear Remy. So what does personal spending means, and what does it mean if it detects? It means that people, households, families, individuals, etc., are spending less. Why someone to spend less? Simply because it cannot afford it. It cannot afford spending more. Inflation has risen significantly, so that means that all the goods, services are expensive now. So people, they try to control and detect their expenses, okay? Because obviously they cannot afford spending a lot. So that's not the beginning of a recession, we'll say, but that's signs that the recession is here, okay? I think all of you have suffered from other crises in the past. We have seen 2008, the crisis, the global crisis in 2008, the 2000 crisis, etc. So we know what the high inflation means, and the fact that implies to higher, more expensive goods, more expensive services. So we need to control our expenses in order to be able to pay for the necessities. And however, the difference this time is that we are facing a lot of a big rise in the energy market. So what that means, higher electricity. We need to pay higher electricity. We need to pay higher for petrol in order to our cars, for our cars, etc. So things are a bit different, and inflation is extremely high. So inflation is higher than 2008. Is okay. So yeah. So I think you pretty much understand what this means for our daily lives. Why dollar supported? Let me close. Let me share. Let me go back to the platform. It is in lowest light right now. Are you referring to dollar, Grana? I will disagree if you're referring to dollar. This is a daily chart. 1, 2, third day to the upside. 105.13. If I put the hourly chart, actually, you know what? I'm gonna put the 30 minutes chart just simply because I want to show you Yes, you're right, it corrected a bit, but uptrend is an uptrend. This looks to be on the anticipation of the data, a bit of a correction because of, it was overbought in the intraday basis, but it doesn't change the overall trend. Market is fluctuating, but the trend is a trend. Okay, so yeah, trend is a trend pretty much. So the breakout of the descending triangle yesterday, okay, it was a bullish sign. So yes, overall it remains positive in the daily, in the weekly, even in the 4-hour chart remains positive. You can see the momentum indicators as well. Intraday, we have some fluctuations. We had a bit of a reversal. That's the 30 minutes chart, but it is what it is, right? So let me check a bit, by the way, whether there is anything else that I missed from the data, because today we have OPEC Plus as well. Oh, yes, and I did miss it. Apparently, we have the announcement from OPEC Plus, which might has affected already oil. But okay, I want to finish with dollar first, and then we can go to oil. Don't forget, I'm waiting for your comments. The only one that replied that he wants to analyze, for me to analyze gold is Karen. So if you have more assets for me, let me know, and Ravitra as well. So guys, are we clear with the fundamentals? Are you okay? Have you understand what that means and why? Before the fundamentals, we had a bit of a dip on the dollar, and now that's the sentiment, and now it's back up again. Okay. So I will just so I will put the daily chart because I want us to see together the next resistance area for the asset. The next resistance area, let me clear a bit actually. So this is a daily chart. In the last 2 weeks, actually during June, the asset topped at 105.56, and that's the resistance that we have for the dollar. If that resistance breaks, okay, that will open the doors for dollar. Oh, why I cannot show it? Because I'm in a demo account. That's why I cannot show you the next resistance level. Never mind, we can do it with one of our indicators. Let not forget that Fibonacci expansions, they can give us support and resistance levels. So here it is. Let me put the weekly chart on. It will be more helpful. Or before. So next resistance areas could be seen on the round of 106, which is just a breath away from the 123.6 Fibonacci extension. And the very next one is 106.42, 40 if I put it properly. But yeah, that's the area. That's the next level to be watched in the medium term if the asset managed to break June's high. Now, intraday, because I guess most of you interested mostly in the intraday, you might be scalpers, you might be in general intraday traders, and etc. Intraday, let's go to the 30 minutes chart. Oh, okay, here it is. I will use my ATR. Why not? Okay, ATR suggests another 14 pips move for the, that was the open price, by the way. So 14 pips move for the 30 minutes chart already happened. So let me check the day. So 92. So that would be somewhere. Let me measure it. So the open price was around here for today. So a 90, sorry, I'm a bit slow. 92 implies to either, oh, it will be somewhere 92. Oh, that's nice. It coincides with our upper Bollinger. So either a move up to our upper Bollinger or a move down to, let me measure it again just to be precise, 92. Because remember, ATR doesn't point to direction. It gives us just an indication of the potential move for the day for the asset. So, oh, I was correct. Well, that's very interesting. So that there is an agreement. So a resistance for the day is as high as the upper Bollinger or the 20-day moving average. So let's try to find some intraday, more immediate support levels and resistance levels. So, nice. Okay. Here we are. 105.45 in case that it breaks the 105.30. The next 105.54, and so on and so forth. It already, on the downside, it already breached the 50% retracement level seen today, so the 104.96. So a turn back below that level could open the doors to 10, come on. You see? Okay, now it's clearer, I think. 104.89, 104.79, and so on and so forth. But yeah, this is just in the case that it returned back here and breaks it. For the time being, it's regaining its ground. So, okay, you can say, Andria, data were a bit disappointing, okay? A bit disappointing indeed. Why dollar is moving higher, right? Where do we get the headline of the news so that I will be able to predict the market? You cannot predict the market. That's a wrong phrase, my dear Thudo. You can do, however, your analysis, technical, fundamental. Observe the news, judge the news, etc. Do your technical analysis as well in order to be able to have the probabilities on your side. Okay, do you get what I mean? We cannot predict the market, but we can do whatever it takes in order the odds to be on our side. And risk management, of course, in order not to suffer losses, in order to suffer just tiny bit. So the word predict is a bit weird because I don't know. Predict means okay, I'm like a guru and I can't predict everything. No, a good trader is trying to have the odds on its favor, judging the fundamentals, understanding the fundamentals, checking the fundamentals. On the other side, doing some technical analysis as well, or you can emphasize only on the technical analysis. There are technical traders as well that they solely analyze the price action. They focus on the price action. That's another approach as well. Again, both type or all types of traders, they should aim to have as much as they can the odds on their favor. Okay, so please help us to analyze the next cryptocurrency. Okay, let's take it step by step. So this is dollar. The fact that it found support on the news, it was due to the fact that the news suggests that Fed needs to proceed with further tightening, more aggressive tightening. That's why we've seen this, that the candle closed positively. Now, can you see that this is a 15 minutes chart, it's in a very tight environment. Can you see that it struggled? We have some kind of it didn't manage to extend gains. We might see a bit of a reversal. We might see a bit of a sideways movement, a reversal. But as long as it doesn't break this latest low, we won't see any pullback back down. So key resistance for you if you are trading in the very, very short time frame is 105.20, 105 level. If it breaks 105, that's a confirmation that it could get back where it was and even extend higher. If we see a pullback, a decisive one, then the yesterday's lows, it will open the doors to the downside. But in general, today's data expected to how we call it, expected to keep the dollar positive. Okay, because it is what I explained is the fact that the disappointing data could add to the odds of an aggressive, even more aggressive tightening for the Fed. Let's wait and see. Yeah, so let's move. Sorry, I'm bumping a lot, speaking a lot. You might got tired already. Sorry for that. I will shift to Karan and it's gold. Gold was a bit of a disappointment lately. I mean, quite dodgy. Remains to the downside, right? So as you can see, again, this I need to extend this. This is something that I have put back in at the beginning of July, if I'm not mistaken. This remains a key support level for gold. So what we have, gold is in a consecutive downwards channel for 2 weeks in a row after this short swing to the upside. So we have a bit of a descending triangle. If I connect my highs, and if I connect my lows, we've seen a bit of a descending triangle as well. In general, gold remains in a negative outlook overall. I mean, for the rest of the year. Why? Tightening and higher interest rates, okay, imply to weak gold. Why? Because of the stronger dollar. Simple as that. Why we occasionally or intraday see some swings higher, limited ones though, right? So that was a limited one, lasted 2 days. That was a tiny one. This is because during the, we've seen a lot of headlines and etc. So they might bring some cash flows in the gold until the market comes down. But the overall picture remains negative. And it is what I just told you. In days, despite that we have a lot of uncertainty, and during uncertainty, people turn to precious metals in order to store their money. This is not happening this year simply because we have tightening. It is what it is. It's fundamentals. If we have tightening, that means stronger dollar, that means gold down. If yields are down, gold is up. If yields are up, gold are down. So this is what's going on. Yields are up, gold is down. So the overall picture doesn't change. If indeed it confirms today a closure below my descending triangle, that simply opens the door to the next support level. Intraday now, let's see. Ooh, that was a big jump this hour. Okay, so it was a much higher, a much more aggressive move than the dollar one. This is the dollar. We had a tiny candle, but here that was a big one for an hourly candle. Not sure whether this is affected from anything else and safe havens, but let me check. Let me double check whether anything else happened or it's just a safe haven flows, limited ones. Should be. Yeah, it should be. Okay. Anyway, it was oversold, so apparently some people so on this oversold condition, they bought if they bought gold. But similar to this one, this might be a limited bounce. Why I'm saying that? Because momentum remains negative, right? Okay, stochastic and RSI, which are my fast indicators, are pointing to the upside, but momentum overall remains negative. Uh, as long as the asset doesn't, let me just, as long as this candle, which will close in 2 minutes, so this candle reverted more than 60% of the down leg that we have seen since yesterday. So if it closed, let me just properties to 250. I want to see something because that's a better standard deviation for my gold 1 hour. So what's going on over here? Sold off. So it found some sellers because it bottom. It was in a oversold condition. Found some buyers during the data. So you see, people were shortening it before the data, and as soon as data were out, they got a bit afraid and they bought the gold. So the next resistance stands at 1,832.30. So that's the next resistance of to the upside for gold in the very short time frame, guys. That's 30 minutes chart, okay? So that's the next resistance. We're 1830, and the very next one is yesterday's top at 1832. So the 30 minutes candle close indeed above today's highs, indicating that we have buying pressure, we have bulls. So the next resistance is at 1830 and 1832. But that's in the very short time frame. Have this in mind. Immediate support could be seen at the 50% retracement, 1817. Okay, that's in the very short time frame. As long as the asset doesn't turn back above 1832, it's unlikely to move to the upside. Okay, because it just points to its entrance back into the descending triangle. As long as we don't see a break of 1833 to be precise, it's unlikely to extend gains above this level. If it does, then that means that our existing bearish market has changed and we have a reverse. Okay, so let's wait and see whether this move is temporary or not. But it was a nice, it was a strong move intraday at least. If something is not clear, please ask me to analyze it again, okay? Dollar-CAD. Dollar-CAD. Sorry, it's a bit messy. Let me just. What we have is moving along with the dollar, so a bit of a pullback on the dollar weakness. Now even to the upside. Also, we have some pressure on the oil. So not sure which time frame you want me to cover, Ravitna, but I will do both. So what we have right now is a bit of a dodginess in Dollar-CAD, and you can see this in the hourly chart. So actually that's not so clear, right? let me start from the daily chart. So what we have, let me put some connecting the highs. I connect those two highs. So it remains in the trend. Let's see. So connect, oops, wrong. Connecting the lows. So it's in a down channel still. Okay. We had a bit of a support yesterday. We still see some support today. So, okay. If it breaks our channel, it could get up to 130.60, which is the high of June. If it turns down again, it could retest once again the 20 period moving average. If it managed to break that latest low at 128, that could mean that we have that the sellers are increasing. So if that is breached, my dear Ravitra, that could bring into attention, back into attention, to our attention. Let me just check something. I want to add my Fibonacci's as well. So no, it won't bring that into the attention. It will bring that one. Yeah, double bottom, and also that will mean the break and breach of 61.8. So yeah, that could open the doors to 127.10 territory. If it breaks that one, if it breach and break the 128. Yeah, in general, Dollar-CAD, the whole year, it was a bit sideways. From the one side, is under pressure due to the supported due to the strong dollar, but we also have a strong Canadian dollar, because Canadian economy, first of all, is doing quite well, first of all, and second, Dollar-CAD Canadian dollars is an asset that is oil related. So the higher the price of the oil, the stronger the Canadian dollar. That's why if you check the weekly or even monthly charts, weekly is clearer with the weekly. It's see, so look at that. I know that is not the best. I have a lot of nice lines because we just analyzed the intraday. But you see, struggle so far this year to break that level. Eventually managed to do it 2 weeks ago and quickly turned down. So it's in an ascending triangle. And it hasn't managed to exit this ascending triangle yet, right? So this is ascending triangle. Should be somewhere here, 130 more precise. Ascending triangle. So it showed that it broke it 2 weeks ago, but it quickly turned within this area again. So overall, in the long term, Dollar-CAD is a bit tricky. Intraday, however, let's get back to the 1 hour chart. I already show you support and resistance levels. What we are having right now is a doji candle, so that shows a lot of indecision. A bearish one retesting the 20 period moving average, another bearish one so far, but we don't have a confirmation for a pullback. We don't. So my two intraday moving average have not confirmed a bearish cross yet. MACD is still positive. RSI is posting a slowdown, but has it run out of steam? Who knows? So we have a really mixed picture. So, and RSI is still at 52. It hasn't show a breakout. Instead, it touched 52 and is looking a bit flattened. So that's not convincing whether further decline will be seen now, in the short term, right now, intraday. So better to wait for this candle to close before you take any decisions. Okay, we need to see that candle closing to confirm whether we have a bearish cross of moving averages and the RSI. If the RSI will get aligned with the bearish signal that stochastic is presenting. If that happens, then the so do I have my Bollinger Bands too? My pivot points over here. I don't have my pivot points. Okay. Nonetheless, if that happens, that will bring to attention that latest fractal, which coincides with the 61.8%. So that means 128.76. And if that happens, the 128.65, so the down Bollinger Band barrier could also be seen as the second support of the day. But yeah, we need to see this candle closing because MACD is still positive. The asset return just 38% of the, so we don't even have this. I mean, so it's okay. Let's turn to the 30-minute chart. So 1, 2, 3 down. The latest one extending lower. Okay, so yeah, unless if you are a very short time frame trader, such as 30 minutes or 15 minutes, which in this time frame, which is a very fast time frame, so stick to it if you're this kind of trader. Over here we have bearish cross, we have RSI turning below 50 and keep pointing further to the downside. So yeah, it depends. You see, guys, that's why I'm analyzing in multiple time frames, because each one of you're different. You're trading different time frames. So I'm trying to cover as much as I have. Okay, as much as I can. Yeah. DAX and cryptos. No, cryptos first. Let's go to Bitcoin. And my dear thinking being, I will show you the weekly chart and the monthly and the daily chart. That's the daily chart, by the way. Let me get rid of all this. And I mean, look at that. In a continuous decline until end of the year, some appreciation in February and January, and a very aggressive sharp decline so far this year, consecutive bearish candles, Bollinger Bands extending to the downside. Everything is pointing to the downside. The crypto market is in a okay. Let's stick to Bitcoin. Bitcoin is in a bearish market since for a year now, and it was very important that it broke that support area, the 2-year support area at 28,000. Another important thing is that it broke the 20k area. What is it? Let me be precise. It was 20k area. Something that actually I will just look at that. It broke the 20,000. Okay. Our next support level in the medium term, I mean, for the rest of the year, for the next few months, weeks, etc. Our next support level, since it breached and broken the 20k, it was back to 2017. In 2017, its high territory, its highest level, it was 19,470. And that was breached and broken today. Today's candle, let's put the 4-hour chart. You see that so that I will put it in a different color. That is the 2017 resistance that has turned now into support, and it was broken. So the asset remains below it for 1 to nearly 3 4-hour sessions. Intraday, weekly, daily, an intraday picture for Bitcoin remains negative due to the strong dollar. So if you put the weekly chart on, you can see that the next resistance is really, really, really far away. Okay, so the next resistance is back to 2019 high, not 2019 high, which was around. Let me be precise. Actually, it was at sorry, come on. It was at 13,820. That's the long picture. You see, negative, aggressively negative, MACD. Okay, ignore RSI because it's the asset, it's the indicator that I'm using for the intraday analysis. RSI keeps pointing to the downside. Can you see that? So it is with this very, very negative outlook for Bitcoin in the medium and long term. Now, daily, the same. Broken this sideways movement that we have seen the last two weeks. It was broken today, so that opens the doors further to the downside, or indicates that the doors are open to the downside, since MACD is still negative. RSI it points to the you cannot see it. So RSI is at 25, but is keep pointing downwards. Stochastic the same. So intraday, let me get to the intraday stuff, 1 hour. So what we have over here, let me zoom in a bit. Here we are. That's the decline that we have seen today. Fast moving average have flattened a bit, so that means that it has entered a consolidation, a range market for the next few hours or minutes, who knows, but remains under pressure. So I'm putting this invert Fibonacci in order to identify support levels. Next support level intraday, it's this latest high, which coincides with the Bollingers. Then we are going down to 18,500. 18,500. Okay, that's the support area. Once the Bitcoin exits this ranging market, this sideways movement that we have seen for 1, 2, 3, 4, nearly 4 hours, but remains under a lot of pressure. Last but not least, it will be Dow Jones, because Emma asked for it. Guys, if you have any further questions, now it's the time to say it, okay? So as you already know, in general, all the global equity market stocks are under a massive pressure. They're in sell-off, and this is something that continues so far today. Sorry, this is the S&P 500. You want Dow Jones, you want USA 30. So that's the daily chart, right? So we are in a downwards channel. You see that? We're in a downwards channel since last year. Yeah, since December 2021. Down, correction, again down, posting a new low, correction, appreciation, again a drift, a sharp drift, posting another. So an overall downwards pressure. And this is what we are facing in a recession, in a crisis. Now, let me emphasize on the daily chart. So we have seen, but something very interesting. Okay? Very interesting. Sacramento, California, and Saudi Arabia. I'm not sure what that means. Sorry. So, Here, first of all, the asset failed to extend above the middle line of our 6 months channel, 6 months down channel. So it failed and it returned back to the lower territory again, posting, however, also an evening star formation, which is a bearish signal. So, first bearish signal, the fact that it failed to move above the 20-day moving average and the middle line of this 7 months down channel. Second, evening formation, because if I'm not mistaken, if I measure this, yes, if I measure this candle, the bullish one, we could see that the third, so first candle, second candle, third candle, the candle closed below the midpoint of this candle. So yeah, this is an evening formation. Yes, an evening formation, evening star formation, which is bearish. So, and this decline continue. Sorry. So um, so so daily chart remains with downside, with the asset likely to come down, retest the latest low area over here. If broken, it could pose a new fresh lower low. Oh, something happened. Let me check. Let me check. Saudi Arabia and Chevron. Did I miss the news or something? Let me check the news there. What about? Oh, sorry. Oh my God, one. Sorry. So you oh no, Saudi Arabia and Chevron. What about it? I cannot see any breaking news. Something happened, something that I missed. Sorry, I'm a bit confused right now. Uh, Share it with us, please, because I missed the news. So I don't know what are you referring to. Thudo, Thudo, in our website. So where you were asking where you can find the news. First of all, the economic calendar. You can find economic calendar in many websites, including ours. So if you visit www.hfm.com, under the tools button, you can see the economic calendar. So over there, you can see all the important economic data releases, politician speeches, and etc. Also, uh, if you again under the if you visit the analysis page, our analysis page, so www.analysis.hfm.com website, which is ours, you can also see all the latest news, all the latest articles, notice news that we create, and etc. So all of them. So yeah, this is where you should start. Dow Jones. Let's continue with Dow Jones. That's the daily chart. We covered the daily chart. In the medium term, the daily chart, the next support is down to the mid of June low. Something is around 19,250 territory. So 30K is a round number, so it could be seen as our next immediate support level. Okay, these two are the next support days um, for Dow Jones. Now intraday. Now let's go down to the 1 hour chart. It was in a sell off, tried to recover a bit, actually sideways because it was overbought, but the overall picture doesn't change. So a turn back down, breaking this latest down fractal could open the doors to 30,000 support area. So what we are seeing the last 1, 2, 3, 4, 5, 6, 7 hours is just consolidation. This is it. Okay, consolidation with a fast moving average flatten. Something that we have seen here as well, right? Here as well. So it's just the need of a correction because it's already oversold intraday. It was oversold here as well. That's why it needed a bit of a correction, a bit of a pullback, a bit of a sideways movement. US oil, yes, I will do that because it's very important. We have the OPEC out as well. So that's the daily chart. 3 days to the upside, and then a negative day yesterday and a negative day so far today. So just to inform you guys that if I'm not mistaken, the OPEC decision is out. Oh, is it? Sorry, wait a minute. Let me check. Something's going on. OPEC along with Biden. Let me check something, guys. Sorry. Let's get to the intraday. What's going on? What we have over here? OPEC. OPEC. So according to Reuters, no decision made on policy beyond August. So they haven't really confirmed anything yet. But what is expected from the OPEC Plus is that they will stick to plan an August production increase. But they decide not to take a decision yet. No decision made on policy beyond August. OPEC Plus to hold next meeting on August 3rd. Okay. That's why the oil remains under pressure intraday. The other thing that caught my eye is Biden. So Biden says he will not make an individual request to Saudis to raise oil production. So as Biden apparently claims that he has already talked to Saudis that they should be raising production in order to pull back down the oil prices. And today's OPEC Plus decided to stick to the production increase. So, okay, that's clear now. This is what happened. Okay, OPEC remains, at least for August, until August 3rd. They remain in line with their increase in production. So, OPEC Plus, they will remain to their plan to increase production for August. On the other side, Biden asked them not to, but they didn't hear. They didn't agree with him. That's why OPEC Plus decided to stick to its plan and increase production at least up to the 3rd of August. For the August. That's why oil has been so dodgy, sideways, choppy today. And that's why it's under pressure, because an increase in production implies to pressure on oil prices. Okay, because of a higher supply. Brings prices lower. Tighter supply boosts oil prices higher. Okay, so higher supply implies to lower oil prices. Tighter supply implies to higher oil prices. So what we have intraday, we have, it was a bit choppy, but we started seeing a decline of oil intraday in the short term. Okay, so let me zoom out a bit. Let's find together the next support levels for the oil. So the next support level for the oil is this latest down and up fractal. So next immediate support is at 107.18, which is these latest two fractals over here back in the 22th of June. The very next one, it comes down to 106, 105.97, but a round number is a stronger support or resistance level. So here it is, 107.718, based on the two latest up fractal over here. And the very next one is 106 level. That's intraday. Okay. Yeah. This has been broken, and that comes in line with this latest down fractal, and this come in line with this latest fractal. Yes, so it is what it is. Even though that's a bit bizarre, RSI remains downward. Stochastic had a bullish crossover here, but it doesn't look that it will be sustained. Okay. So negative bias remains intraday in the very short time frame. Oh, yep. To the flip side, to the upside, the asset, oops, that's the 4 hour. So to the upside, the asset needs to come back up and break this trending line that I put, that I connect today's lows, is to breach and break it in order to suggest that it will get back up again. For the time being, is posting consecutive lows, consecutive lower lows, consecutive lower highs, indicating that there is a lot of pressure that comes in line with the RSI over here, as you can see. RSI, sorry, it points down, comes in line with the stochastic as well, that is also pointing further to the downside, and it has been to the downside. It has posted lower highs since yesterday. So yeah, intraday a negative bias for oil. In the daily chart now, what we have, let me delete all these lines. What we have, here it is. Okay, it had been to the upside since April 3rd, right? That's the nice channel. It was to the upside until, nearly end of May. So that was, let me put this, so at the 7th, in the mid of June, we had a very big aggressive sell-off that indicate a reversal on the outlook for oil. So what's now? The asset, since this big, huge sell-off, the asset remains below the 20-day moving average since then. But it's been held. So what we have, so remains below the 20-day moving average, turn back to below the 38.2 Fibonacci level. Let me put my daily time template on. Sorry for that. Here we are. So what we're facing right now. Oops, no. No. What I want to do is try to connect these lows. Okay, by connecting these lows, we had an imminent support level. Okay, no resistance level. So it failed to breach and break the 20-day moving average. It came quickly down. Okay, so also it's below the 50-day moving average for 2 days in a row. That's our very, very short immediate support level. So, okay, that's interesting. A break of this trending line, of this trend line, could suggest the return back to 105 level. Let me put it, it's a round number here. While a break of that level, other than a round number, is also the bottom that we got from this aggressive selling in the mid of June. Then this could open the doors to 101 again, which coincides with the latest low and also the lower Bollinger Bands. So for the time being, oil has turned negative intraday, but also in the medium term, in the daily chart. Okay, of course, a confirmation could be given only if it breached this trend line or even break it. Okay, because if it breaks it and if it gets back below the 105, then this could open the door to 101. Okay, so yeah, that was it, guys. So oil covered as well. So I can see that there are no further questions. So I think I'm gonna call it a day because I'm already an hour live. Let me check a bit the calendars to see whether there is anything else that I forgot. So it's all to the downside. This is simply because OPEC remain on its plan for August at least to stick on increasing production. So that's the decline is a bit logical. It's a bit reasonable. Dollar. Okay. Dollar. Oh, it reverted loss. It reverted its gains apparently. But this looks to be. Let's not forget something that I forgot to tell you is that we are in the very, very last day of the month, of the quarter, and of the half of the year. So that's why you need to be extra careful. Exactly because this just happened. We've seen a sell-off despite the fact that data should have supported the dollar. This is because many fund managers, people that they hold position long term, because it's at the end of the month, of the quarter, of the half of the year, they might close their positions, their long-term positions today. So what that means, it means taking profit, closing position and reposition again tomorrow or possibly on Monday, which will be the first working day of the new month, of the new quarter, and of the second half of the year. So keep yourself, keep in mind the support levels that we discussed earlier. Okay. So dollar had a bit of a pullback, however, it remains above its 20 period moving average, above the key. So you see that? So remains above the 20 intraday, above the 20 period moving average, well above yesterday's lows. In the daily chart, remains at the high territory. So is this a bit of a correction because people are repositioning ahead of the new month, new quarter, the second half of the year? Not really easy to say, but what's easy to say is that the asset overall remains well supported. Also, stocks remain under pressure, remain lower. They have U.S. stocks more precisely set to slap by more than 1% in the open. And that's and just to mention, guys, that in regards to the U.S. Stocks, we have seen more than a 20% decline this week. We have seen a big decline this week, and more than a 20% decline of the year for the stock markets. So that's the worst ever first half for the US stocks since 1970. Okay? 1970, it was 21% down. For example, the USA 500 drifted this year more than 28%. The USA 500, where is it? The USA 500, cannot found it. The USA 500 declined by more than 28% this year. So that's worse, the worst first half of the year since 1970. So of the last 52 years. So we're in a, so recession is here. What else can I say? Thank you very much for attending. For those that they have just joined, you're gonna see the video will be there so you can see it again. And just, you can check the assets that you're mostly interested. I will call it a day, but because I got a bit tired. Thank you very much for attending. Thank you for being here with me for more than an hour now. Hopefully the session helped you. If not, your feedback is necessary. Give me feedback. Let me know how you want us to do the live analysis, how we can help you, what kind of material we should provide, what kind of lives we should do, how we should do our lives, and etc. Okay. Thank you very much. Have a great day ahead. Take care. It's a general, a lot of uncertainty, a lot of volatility, something that has been going on for a long time now. And take care a lot today, because it's the very last day of the week of the month of the month of the quarter of the half of the year. So we might see a lot of repositioning. Okay. Thank you very much. Have a great day ahead. Take care. Bye bye.